Hey, this is Scott Cole from trendfollowinguniversity.com, and before you proceed with the current video, please read this disclaimer. Take a moment, pause your video, and check out this disclaimer regarding the risks involved in futures and options trading. Thank you. Hey everybody, Scott Cole here from trendfollowinguniversity.com, and in this video I wanted to discuss the concept of the turtle trading system and the actual use of discretion when employing that system. What I think most people who are familiar with, or at least somewhat familiar with the turtle trading strategies, is that the ideas and concepts were presented to that group of traders by Richard Dennis and William Eckhardt, along with some discretionary trading tactics and criteria and rules that they were also supposed to employ. So many people, I think, feel that or believe that they were presented some magical trading system that is responsible for generating these enormous profits, but in fact, over time, those actual systems have not really performed that well. But along with the systems, they also provided some discretionary criteria, and I want to cover one of those criteria today in this video. Okay, so I have a chart here of the Australian dollar back in 2011, and as you can see, it traded in a very choppy trading range for the latter part of that year. And Turtle System 1 involved buying and selling 20-day breakouts and what they called the last trade loss filter. So if the previous 20-day breakout resulted in a losing trade, then they would take the next 20-day breakout. If it resulted in a profitable trade, they would skip the next 20-day breakout. The idea is that after a trending move, a market needs to consolidate for a period of time, and therefore it doesn't make any sense to continue to buy and sell every single 20-day breakout. So on this chart, I've got labeled the various 20-day breakouts that are also have the last trade loss filter in place. So starting with this breakout here, where we broke this level, this is a short trade signaled by Turtle System 1, and it resulted in a losing trade because here's a new 20-day breakout here, number 2, to the upside, and so on and so forth. So here's the next 20-day breakout to the downside, so obviously number 2 was a losing trade. Here's the next 20-day breakout to the upside, so the trade number 3 was a losing trade. Here's another breakout to the downside, 20-day breakout, so number 4 was clearly a losing trade. And then here's another breakout to the upside, so number 5 clearly was a losing trade. So we have all of these breakouts, even with the last trade loss filter in place. Now, what a typical trend following system does is we'll take all of these trades automatically. And many of the big commodity trading advisors out there in the business trade 100% systematically. And the reason for that is the institutional investors prefer that they do that. They don't want any sort of discretion involved, because a lot of times when discretion is at play, it can have adverse results if the trader begins to panic in some situations and maybe start doubling down on their bets. And we've seen one disaster after another as far as some of the proprietary trading at some of the banks over the years. So, and even Richard Dennis himself blew up a couple of times because he was employing some discretion when he probably shouldn't have. But one of the concepts that they taught was the trader should look at the chart and look for good chart structure so that they could avoid just taking every 20-day breakout. So if you'll notice here, in some of these breakouts, there aren't really obvious points of support and resistance. For this trade number 1, which was a short sale, you have a minor point of support here, but really nothing significant on the chart until this level here. For this breakout here, there's really no area of resistance at the 20-day high whatsoever. It just so happens that this bar here made the highest price over the last 20-day bars, but there's no real level of resistance above that suggests that a breakout above that level would lead to a much bigger move. And that's what Dennis and Eckhardt really taught. They want to see good structure on the chart. So down here would be a level that they would consider selling more readily rather than in here. Now, even though this trade would have failed, that's still a place in the chart that they would view as an area of significant support, and they should get some good momentum down through there. And they actually did get some momentum once that level was broken, at least for the next week, and then the market reversed. Here again, sale or trade number 4, there's no real level of resistance up here that suggests that a breakout really can really go much further. It ended up going up a little bit more and then reversed significantly, similar to this particular trade. And there again, trade number 5, no real area of support here to justify this particular sale. So what they wanted to do was identify an obvious point of support or resistance on the chart, and they would like to have seen breakouts that occurred at the same time. So if you had a market that's getting ready to make a 20-day high in price, if it was also going to make a new 10-week high on that same day, then they would give more weight to that breakout. And over here, trade number 7 is an area where we have an more obvious point of resistance here, and you have a 4-week breakout or a 20-day breakout that would also be combined with more of an 8-week breakout as well. So this trade would be given more significance than all these other 20-day breakouts on the chart. So that's a concept that many traders really should learn. It's a good idea to come up with a core trading system, but an individual trader also has a little bit of an edge over the big institutional type traders in that they can employ some discretion, look at charts, analyze the charts, look for areas of obvious support and resistance, and then take those trades that have a little bit greater probability of working out in the long run, rather than just taking every single trade that's indicated by a mechanical trading system. So I just wanted to cover that concept of discretionary trading along with the turtle systems, because the discretionary concepts taught to the turtles are really not in the public domain. For more information on the discretionary tactics employed by the turtles and trend following in general, and to learn how to build your own trading system, visit our site at trendfollowinguniversity.com, where we've just begun offering our new online trend following trading course. And we hope to see you there soon.